I hope this goes live. Again, we're going with another quick tip that I want to make sure you guys kind of see what's coming around the corner, what the used car market looks like now, and then again, my projection of what it might look over the next 90 days. And of course, I learned through COVID, you can't predict anything nowadays. But I do want to show you some consistent trends that we see, the feedback that we're getting from our dealers, and kind of what we're seeing all together with the numbers and metrics that we track. And so, it's weird. Here we're out of the election now. As far as it's over, the election's done. November 5th came and gone. Whoever you liked or didn't like, whoever won and didn't won, if you're happy or not, life's going to move on. And, but it seems like there's a little bit of spike in economic confidence. The, stock market moves up, and there's an administration coming in that's going to do less regulations and try to do whatever tax cuts and things, good or bad, that I think people are going to, what people were assuming were that consumers were sitting on their hands, kind of wait until this is over and the smoke clears before they make any big decisions like buying a house or buying a car, right? My wife's doing real estate now, and obviously the leads over the last month or two has been really light. The interest rate, even though that went down overall, the Fed dropped the rates, the mortgage rates actually went up. So, I think now that the smoke is cleared, we really do have essentially 90 more days until January before the new administration takes over. And so there's still going to be a lot of, hesitancy, I think, up until, that day happens. And then we roll into tax season. The bad thing is, good or bad thing is the tax season is obviously going to be representative of the last administration. So if the new administration does any kind of other tax breaks and stuff, we won't see that for a bit. So it's not like all of a sudden this new tax season is going to have a big breath of relief. It's going to be reflective of this current administration. And I would say not necessarily even this administration. It's been past 5+ years of tax seasons as far as the automotive world is concerned. It's been pretty light, right? It's years ago, I heard a dealer saying, well, it's because of automatic deposits now. And that kind of made sense. People used to get a check in the mail, $3,000, $5,000, whatever it was, and they would sit it on the counter or sit it to the side and not spend it until they're ready to go buy a car. And now it's automatically deposit. Next thing you know, they're spending the money. By the time they turn around to go buy the car, all that money's gone. That kind of made sense. But it's also, I think, with the end of the year model clearance, the new cars and things like that are going to happen, nothing's going to change. The Fed may or may not lower rates between the end of the year, but there's not much going to change between now and the end of the year. We run into holiday seasons. People are busy with that. They're spending money on things like Christmas presents and things like that, or holiday trips. So it's still going to be a little bit of a shaky, sit on our hands, wait until the smoke clears, administration's in, new policies are going in, and now people are going to get used to the new norm. But again, every day you got to put your pants on one leg at a time. You got to get up early and go to work and get the kids off to school, and our life should be back to normal. But let me show you kind of what we see here in some of these metrics. And I want to show you what we see across the board nationally with all of our dealers, hundreds all over the country, some of the best operators in the country, and what their numbers as a collective look like. And then I compare that to, I'm going to go here to, this is Google Trends and Used Car Shopper Index. I reference this a lot. If you're curious about this, is go watch some of my videos. But Google's tracking the activity of people looking for used cars, and as you can see right now, this is at a 40. Okay, out of 100. Now this is a 5-year window, and I want to point out, and I've done it before. If you're watching me multiple times, it's repetitive. But if you look at COVID shutdown, when everybody was not going to work, sitting at home, people looking for used cars just dropped from, a peak of February 2089. Tax season peak it probably would have hit 100 back then. But then COVID shutdown happened, and by March 29th, it's down to 46. We're at a 40 right now. Okay. So this election impacted more activity of used car shoppers than even COVID shutdown did. So of course we're going to get a drop. Now, what happened was we had a little bit of a spike here at the beginning of October. Okay. And the reason why I want to point that out, what we track is not only the shopper index, which is in the red here. I'm going to show you two charts. This one's in the red, the shopper index that we get from Google. See right here, 40. But I also compare it to our dealer's 2-week sold percentage. Repetitive here, but I don't like looking at a rolling 30 days of sales. What I want to look at is what have you sold in the last 2 weeks. I want you to sell half your inventory in a 2-week window. So you're selling 100% of your inventory in a 4-week or a month window. Okay, regardless of what time of the month it is. Here it is, the 7th. So what's the last 2 weeks been? And 5 times that by 2, that's kind of what you're on pace for the a 4-month window. And if the goal is to sell 100% of your inventory each month, well, I need you to sell 50% of your inventory in a 2-week window. So that's what we're tracking here. And you can see, July, our average dealer was selling 100% of their inventory. That's just our average dealer, okay, by the way. And it dropped off going into September. And then we had this little bit of spike where we went from about a 42% to 44%. So ultimately, again, 2% in 2 weeks equals 4% in a month. We had about a 4% increase in volume. Well, that's not surprising because if you look at the shopper index on Google, it went from 44 to 50. Now, that was the 8th to the 15th. So you would assume if shopper index spiked around the 15th, that means the beginning of November, sales would increase. Sure enough, we started seeing an increase. Now, and again, you could follow this chart verbatim when on February 19th of 2020, the shopper index peaked. But at that time, the volume was at 37%. But again, the volume looks 2 weeks ago. What was 2 weeks ago, right? It was low. So when it peaked on the 19th, you would think in the next week or two, sales would follow. Sure enough, by the 12th, it went up on the 30 by the 5th, and it peaked by the 12th, right? So sales came. As the sales dropped, so did volume. As shoppers increased, so did volume a week or two later. My point being is, since the mid of October, it dropped off down to 40. So where do you think the 2-week sales volume is going to go in the next 2 or 3 weeks? It's going down. Okay. So this is where, and traditionally, the shopper index drops all the way through mid-December, then starts picking up as people start realizing, they're going to be refiling for taxes soon, and they start shopping around knowing, okay, maybe the end of the year they get a bonus and they're going to use that money for Christmas bonus or end of the year bonus for down payments on a car. So most people will start shopping into December, rolling into January, but they don't start pulling the trigger till February and March. And so my point is, if we're already at a 40, where are we going to be by December? Because every year, December is the valley. Look at 2022. The valley of the shopper index and the sales happened mid-December and then start booming. What happened in 2021? December 18th, it hit the valley. What happened in December of 2020, right? It hit the valley other than October, right? So we hit these valleys. See, even back here, October 31st, we hit a valley. It's kind of where we're at right now, beginning of November. Now, I think that little spike had to do the pre-election jitters, meaning people going, okay, if shit hits the fan, Trump gets in, Harris gets in, and I get laid off, or, the world's going to riots and everything, or whatever they think is going to happen. They're like, maybe let's just go ahead and get the car now before interest rates go up, or before I lose my job and get laid off, before whatever. So I think that little bit of a scare of the election caused the shopper index to go up, which gave us dealers a little bit of volume, but it's misleading. So let's look at also these other two charts. So remember the red and the green down here, they're the same charts right here, but the other two indicators that I'm looking at, and this comes from Black Book, they do right here, Market Insights each week. On Tuesdays, they update it. So just pull it straight from there. And the two that I'm looking at is the average age of retail days to turn. It's at 50. And then I also look at wholesale, what's sold at wholesale. Because again, wholesale is a good indicator of what's happening as a retail, a reflection of. Sales start going down retail, within a couple of weeks, what sells at wholesale goes down. So you look at the shopper index, the red line really dropped off from August into August to October. And so the average age of cars to turn went up with that. We get a little spike in volume, the average age goes down. And then the blue line is what's sold at the auction. We went from 56% selling to now 58% selling. That could be a reflection of the hurricanes and stuff. I see wholesale probably still going up and staying steady as people are replacing those hurricane storm vehicles. But what's going to happen is this average age of turn is going to trend back up. It looks like happened last year. December dropped off, and then as we went into tax season, it started building back up. So I think we're going to get this uptick if sales follow, which again, every indication would tell you the shoppers aren't there in the last couple of weeks. So we're not going to be selling. Sales are going to start dropping because shopper index has, and then the average age of used cars are going to go right back up. So that's what's happening now. And I'm going to go ahead and stop sharing. And so lean and clean. Don't be worried about stocking and buying cars. If you got 100 in stock and only selling 50 or 60, it won't look good over the next 30 days, maybe even 60 days or 45, 60 days as we're rolling into January. Again, the transition of power, good or bad, whatever way you see it, it's not going to happen until the end of January. So we got a while before any changes, but then we're rolling the tax season, and by then new administration's rolling with what they're going to be doing. So I do think you want to take these November, December, and January to clean up your inventory. If you've got age, if you didn't see a good little spike in cleaning up, you really need to make sure you get the inventory moving and cleaned up so you can roll into a tax season where you're nice and clean and benefit from that activity happening. There is always that spike, people buying those cars at that point in time from about mid-February to mid-March in the March range. So use these next 90 days to clean that inventory up so you're positioned well with that. And then again, new administration, whatever, good or bad, I think people see this as a spike for the economy if there's less regulations and tax cuts coming. So there might be more confidence in the market for those people that have kind of been sitting out to come into the market. But you also got to worry about new cars and end of the year model clearance, rebates and incentives. There's a lot of money out there, especially like Chrysler, Dodge, Jeep products, Nissan, things like that. They're putting some big incentives out there to get their 2024s moving, rolling into 2025. So with new car increase sales, you're going to run into a bunch of trade-ins. So trade-ins are going to lead to less cars need to be bought at the auction, which then brings wholesale down. But we also run into a time where dealers start buying more inventory, trying to stock up for tax season, thinking they could buy it cheap now, $1,500 to $2,000 cheaper than they can in February or January, February when tax season spikes. But I always say you want to be a buyer at current market seasons. So as long as you're keeping your inventory mean and clean, meaning carry and sell 60 to 70% in the first 30 days, have less than 10% age, hopefully nothing, meaning over 60 days old, carry 100, sell 100 plus. If you can do that, you can always, regardless of the economic situation, you're going to be able to be standing tall through that. So hope this tip was helpful. We want to see how we can help you through this. We're going to be able to point out exactly down. You could be selling 70% in 2 weeks, 140% of your inventory a month, and we'll still find something wrong with your inventory or lead management as we combine those two. So if you like help stay ahead of this or to help clean up that inventory over the next 90 days, go to lotwalk.com and sign up for a demo. I'll be doing a demo for you. I'd like to just, again, see what situation you're in and what we can do to solve those problems. Lotwalk.com. Hope this was helpful. See you next week.